myths and truth about how to choose the best exchange and not to lose money. If you are just starting your crypto journey, you have noticed how little really useful and in-depth yet understandable information about crypto is on the internet. There are thousands of articles and YouTube videos on various topics, but it amazes me how superficial they are. Meanwhile, if you do not fully understand the nature of the most basic parts of the crypto market, then always at risk of losing your assets. And in this episode, I will tell you about what is really needed to know when choosing a crypto exchange to make money, not to lose, how exchanges make money, what it's really worth to be wary of, and how to avoid ending up on the list of users who lost their crypto. We will talk about both what many people know and what is not usually told to the general public. My name is Ivan. I am an investor and businessman. I have 6 projects in the field of crypto, IT, and artificial intelligence. And while I am working, right now my digital double is recording this video for you. All the information has been personally double-checked by me. The future is already here. What you need to know when choosing a crypto exchange. First, let us understand why you need an exchange at all and what benefits it can provide. For most people, a crypto exchange serves 3 main functions. And also, all crypto exchanges have one major danger for you. Along the way, we will also find out what to pay attention to when choosing an exchange. In brief, it is convenience, security, and the tools that the exchange provides. Buying coins on the crypto exchange and licenses. So the first function of the exchange is that you can buy cryptocurrency on it. Either it is buying directly from the exchange, in which case you pay a commission, or it is peer-to-peer trading. That is, the exchange acts as a guarantor of a direct transaction between you and someone else. Usually peer-to-peer trading is done without fees. If you are a beginner, initially you only have fiat, which is the term used for traditional currencies like the US dollar, euro, English pound sterling, Canadian dollar, or any other country's currency. You can buy cryptocurrency for fiat on the exchange. But which cryptocurrency to buy? It depends on your goals. I did a separate video on choosing a cryptocurrency. So regardless of which coin you have chosen for yourself, I recommend all beginners to start by buying a stablecoin, is a crypto tied to the value of a currency, such as the US dollar, and backed by it. The most common stablecoin is USDT. 1 USDT is equal in value to 1 US dollar. And with stablecoins in your possession, you can then buy any other crypto. Of course, you can simply buy the cryptocurrency you need with fiat. For example, to buy Bitcoin for 1,000 Indian rupees. But it is easy for a beginner to get confused by the exchange rate, or to buy the wrong coin, or to buy a coin with a constantly fluctuating price, like Bitcoin for example, only to find out a week later that the capital has decreased. The essence of a stablecoin lies precisely in its stability. It is an island of safety at the intersection of cryptocurrency and traditional money. The better the exchange, the more cryptocurrencies you can buy on it. One cryptocurrency can be exchanged for another. It is also important that the exchange needs to be licensed by the country in order to operate with its fiat currency. Simply put, if you log in from the US to the famous Binance exchange and can buy Bitcoin for $1 by directly paying with your card, it means that the exchange has a license from the US Securities and Exchange Commission. For all of us, it is more convenient if the exchange has many licenses, so we can buy crypto with various currencies. In addition, each such license means that the exchange has passed the regulator's inspection of a particular country. We can say that more licenses from different countries indirectly confirm that this exchange is more reliable than others. For the exchange itself, it is complicated and expensive. So new exchanges usually appear in offshore zones where they do not have to pay taxes, and then acquire licenses from different countries one by one. By the way, by acquiring a country's license, the exchange pays taxes to its treasury and thus benefits its residents, which is good for the eco-friendliness of crypto business and its perception by government agencies. This reduces resistance from authorities in various countries to the spread of crypto. The second function of the exchange is earning. There are various ways to earn money on the exchange, and I categorize them based on the level of risk. The least risky method is crypto deposit, which in cryptocurrency is commonly referred to as staking. This is when you allow the exchange to freeze your cryptocurrency, usually for a period ranging from a few weeks to 3 months. At this time, exchanges use your crypto to earn money and then return it to you with interest. It is easiest to compare staking to a traditional bank deposit. You will receive the lowest interest for stacking stablecoins like USDT, while the highest interest is offered for stacking coins with more volatile exchange rates. Sure, you may see on some exchanges promises of staking with returns of 80, 100 or 120%, but the pitfalls and different conditions will not let you earn much on such options. On average, staking will earn you between 8 and 12% annualized interest. This is not too risky type of earnings, and many owners of crypto use it. The main thing is that the exchange has the option of staking in the first place. You can also simply buy an asset and wait for it to become more valuable, then sell it to make a profit. This is called called spot trading. You can earn more here, but no one guarantees you a profit. And in fact, the asset can fall in value, so it is a riskier option than staking. The most risky but possibly profitable way to earn money is trading. There are different types of trading, but what they all boil down to is that you choose whether one asset will be more expensive or cheaper compared to another after a certain amount of time. I will not go into detail because the risks of losing money here are much higher than the chances of earning. Trading requires a huge amount of time, knowledge, and full involvement, and the risk remains very high, so I do not recommend this type of earning for beginners. The third function of the exchange is transfers and crypto storage. This is associated with certain risks and common beginners' mistakes. Transfers can be made either on the crypto exchange or using a crypto wallet. And if there are still possible disagreements about which method is more convenient, then I definitely recommend to store crypto only on a crypto wallet. The cryptocurrency wallet itself is an application where the keys to access your cryptocurrency are stored. Also, a good cryptocurrency wallet has the ability to transfer, work with different cryptocurrencies, but most importantly, separate security systems. It is virtually impossible to hack a trustworthy crypto wallet. Exchanges, on the other hand, cannot provide a comparable level of security. Being a more complex system than a wallet, crypto exchanges has more vulnerabilities, and from time to time crypto exchanges get hacked and all the funds of its users end up in the hands of hackers. And even the largest exchanges fall victim to hacker attacks and lose hundreds of millions of user dollars. In 2022, the largest exchange, Binance, temporarily suspended its blockchain network after hackers stole Binance coins totaling $570 million. In August 2021, the Poly Network exchange lost $610 million in assets. Sometimes exchanges claim that they have returned a significant part of the crypto. How is this achieved? There is an unspoken rule that a hacker who takes no more than 10 to 15% of what is stolen is not really prosecuted. Sometimes insurance funds and exchanges help, but all of this works far from always. And the list of exchange hacks from 2014 through 2023 is dozens of cases. The losses amount to hundreds of millions of dollars. Do you want to take that risk? If not, be sure to watch my video on how to choose the most convenient and, importantly, reliable and safe crypto wallet in the form of an application on your phone. I hope you have already realized that this channel has only facts and pure knowledge for you. Do subscribe, and I promise, every minute of your attention on this channel will be well spent for you, your wallet, and your future. For now, I will tell you the main risks when dealing with exchanges. It is hacker attacks and bankruptcy. How can regular users protect themselves from the adverse consequences? Okay, so if you bought a coin and transferred it to your wallet, you are safe. But if you are investing, trading, or staking, meaning you have to have a part of your funds inside the exchange, you are exposed to significant risks. One of them is hacker breaches of exchanges, which I just mentioned. Do not forget about phishing as well, the main defense against which remains the use of two-factor authentication, methods to verify your identity before transfers, such as different passwords, email confirmations, and so on. Also, almost all exchanges work only through passing KYC, verifying your identity. It is a mandatory element for the security of the exchange. But there is an even more significant threat, the dishonesty of the exchange itself. And while after a hack it is often possible to recover a part of the funds, and special departments within large exchanges are responsible for security, nothing will protect you from the exchange's bankruptcy. For example, on June 23, 2022, the large exchange CoinFlex suspended withdrawals. People lost $84 million worth of assets. What has happened can be compared to a cash flow gap in business. What exactly happened? Why did people lose money, and how to avoid getting into such a situation? All exchanges have their own provision. That is, the untouchable amount of cryptocurrency contributed by the owner of the exchange. It is equal to the sum of all the assets of the exchange. That is, if all users trade assets worth $1 million in total, then the exchange owner must have his own million, which is not related to clients' money, is not mixed with them, and is needed in case everyone wants to withdraw their money at the same time. Many exchanges do not have a large enough amount of money for such provisioning at the start, so they turn to companies that have large sums in different cryptocurrencies. It is unclear exactly how the owner Roger Ware provised his CoinFlex exchange at the start, but eventually his exchange started using customers' money. Perhaps he used them for risky investments and lost them, or became a victim of a hack. Anyway, for whatever reason, Roger lost the exchange customers' money that he had absolutely no right to take. This caused the exchange to fall under the threat of bankruptcy, and some users lost funds. In a similar situation in 2022, users of the FTX exchange found themselves. The largest creditors were short more than $3 billion, and the total loss was estimated by the US Commission at more than $8 billion. What is the solution for you? There are two ways. The first, to trust the auditing companies that verify the provision of the exchange. But going deeper, nothing but reputation will keep an auditor from giving out a good rating for a bribe. The second way, to trust the reputation of the exchange itself. The largest ones spend too much money and effort to organize themselves, get licenses, and gather millions of users. Well-known exchanges make too much money to try to steal yours. Although 100% guarantee of safety of crypto will give you only its storage on your reliable crypto wallet. What do exchanges make money on? I have categorized the sources of income of exchanges into two groups. The first is commissions. They are mostly small, ranging from 0.1% to 3%. But if millions of people use the exchange every day, that is a pretty big profit. There are fees for deposits and withdrawals, that is, for buying and selling crypto, as well as for its transfers. In some cases, there are no fees at all. For example, peer-to-peer transfers usually do not charge fees. The second source of income for exchanges is traders. In addition to the usual fees, they pay a fee for each individual trading transaction, and they also lose all their money if they use the exchange's money for transactions, so-called leverage. This is another reason why I did not broach the topic of trading in detail. So understanding all of this, let us get to the most important thing. I have put together a little checklist of how to choose the best and most secure exchange. First, I recommend choosing from the most well-known exchanges that value their reputation and are unlikely to suddenly go bankrupt because their leader used your money for their own interests and lost it. The best well-known are Binance, a globally renowned platform and the largest by volume of cryptocurrency trading. Bybit, one of the fastest growing cryptocurrency exchanges offering different trading options. Huobi, a large global financial services provider in trading and investing. But if you want to buy a little-known coin with great potential, it may not be on a large exchange because there is an entry threshold that is insurmountable for small capitalization projects. Then you will have to find lesser-known exchanges and risk more. The second important factor is liquidity, that is, the ability to sell any cryptocurrency quickly and at a fair price. If we are not talking about stablecoins, but for example, about Bitcoin, and even more so, about large volumes, the small number of buyers and sellers will delay the time of the transaction. By this time, the rate may change, and you will lose some money. The larger the exchange, the higher the liquidity of the coins on it. The third point on the checklist, the ability to buy a stablecoin with fiat. As I said before, it is a stablecoin that is best to buy before exchanging it for another crypto coin. And the ability of buying for fiat, that is, the currency of your country, depends on whether the exchange has the necessary license. The fourth factor of choice, the exchange having a mobile application and the logicality of its interface. It is all simple here. The more convenient it is to use the exchange, the less chance of making a mistake and losing your crypto. It is important for the app to offer various two-factor authentication options, with full access available only after identity verification. Large exchanges ask for passport information to secure your money. Believe me, the safety of your funds is a top priority. The fifth point is the provision of the exchange. If you plan to be active with the exchange, choose auditors you trust and learn more about its provisioning. Some crypto exchanges provide public access to wallets with provisioning. That way everyone can see that the crypto is really there and no one has withdrawn it. But be careful. It is one thing to have provisioning in, for example, stablecoin and Bitcoin, but it is quite another in coins of low value. For example, some exchanges issue coins, 90% of which are not released into the market, and use them to provision their own exchange. It is a weak provisioning because in the event of an exchange collapse, it is unlikely you will need their coins. The sixth point is the ability to buy different coins. Agree. It is inconvenient to go from exchange to exchange in search of the pair you need. Usually, the most well-known exchanges have the most coins available for purchase. But you should understand that new projects and small capitalization coins that have a large growth potential may not be found on major exchanges. To be listed on them, the project must have a capitalization of several $1 million. The seventh point on the checklist is whether the exchange has its own blockchain. If the exchange's assets are stored on its blockchain, it reduces the cost of transferring assets between users and therefore reduces fees. In some cases, transfers between users of the same exchange can even become free. And the last eighth point on our checklist is the staking feature, which I talked about earlier in this video. If you only plan to buy and sell coin, then I would recommend safe storage in a crypto wallet. Believe me, losing all your assets after an exchange hack is much easier than getting really rich by staking. On the other hand, if you plan to actively trade on the exchange and therefore keep part of your portfolio there, at least temporarily, a modest profit from staking will help you balance the costs of fees and other expenses. If you want me to do a breakdown of the most famous exchanges using this checklist, please like this video. Once it gains 50 likes, I will prepare a detailed breakdown of popular exchanges, so I have tried to make this video as helpful as possible. If you are interested in even more facts and useful information about crypto, I have prepared a whole series of videos for you on how to start using crypto with just a couple dollars, which coin to choose, how to check a crypto project for scams, how to choose the best crypto wallet, and much more. The link is in the top right corner and in the description below the video. Do not forget to share your thoughts and questions in the comments. I will try to answer them all. Thanks for watching.